Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, you're watching Power Breakfast on CNBC TV18. Now, the possibility of LIC picking up a majority stake in IDBI Bank is not going down well with the former executives at the Reserve Bank of India. Talking to CNBC TV18's Lata Venkatesh, many of them expressed concerns over the issue of conflict of interest due to LIC's stake in several other banks. Lata joins in with more on these concerns. Lata?
Yes, I did speak to a number of ex-RBI veterans of the highest possible levels, and they were a little apprehensive about the manner in which the LIC-IDBI deal is going. One of the problems, of course, which everyone mentions is a conflict of interest problem. If LIC were to indeed run IDBI as its bank instead of just warehousing the shares, then what about LIC's position of having board directors in the boards of several other banks? I mean, as a competitor, you will be in on their secrets, and therefore it would be unfair to those banks. The second problem which these RBI former honchos said is a question of financial stability. Reserve Bank is the keeper of financial stability of the entire system. And what it would like is that if there are problems in one bank, then the shareholder, which is the government, should bring in more capital. If the shareholder is a private shareholder, he should bring in more equity. But when LIC owns it, there is no further equity coming into the system. So as a keeper of financial stability in the system, the Reserve Bank ought to be worried, because the total amount of equity to balance the debt, good and bad debt, would be inadequate. That's a second worry. And a third, of course, is would it become a private bank if LIC owns 51% and not the government? Now, there is no clarity on this. When IDBI owned IDBI Bank ran as a private sector bank. If you remember, Gunit Chadha was the CEO. But now the government has to ensure that it is run that way. Just because LIC buys it, it may not be run as a private sector bank. It could be that government will continue to make the appointments and continue to intervene like any other public sector bank. For financial stability in the system, the Reserve Bank ought to be worried, because the total amount of equity to balance the debt, good and bad debt, would be inadequate. That's a second worry. And a third, of course, is would it become a private bank if LIC owns 51% and not the government? Now, there is no clarity on this. When IDBI owned IDBI Bank ran as a private sector bank. If you remember, Gunit Chadha was the CEO. But now the government has to ensure that it is run that way. Just because LIC buys it, it may not be run as a private sector bank. It could be that government will continue to make the appointments and continue to intervene like any other public sector bank, in which case even the advantage of running it like a private sector bank will not be there. So overall, actually, serious concerns about this deal from the ex-RBI honchos.
All right, Lata, thanks a lot for that. We will definitely keep watching out for this story as it develops. But let's move on. Heads of 11 state-owned banks will brief a parliamentary committee today about the problems of mounting bad loans and increasing fraud cases. Rituparna Bhuya now joins us on the phone line with more details with regard to this proposed meeting. Ritu, good morning.
Good morning. This committee had met RBI governor a couple of weeks back, and now it's meeting these 11 banks. Remember that these all banks which are meeting today are under the prompt corrective action of the RBI. This includes UCO Bank, IDBI Bank, Central Bank of India. So all these banks will be making presentations to the members of the Parliamentary Standing Committee on Finance. Will be telling them what of how they are trying to resolve those problems. From what we understand...
all right, I think we've got you on a scratchy line this morning, Ritu. We'll try to reconnect with you. But meanwhile, as we do that, just keep an eye out on GST, because remember, we're closing in on the 1 year mark, 1 year anniversary of the GST. And when the GST was first mooted, Tamil Nadu was not completely sold on the new tax regime. A year since the tax has come into effect, the state's coffers have reaped a healthy dividend. But CNBC TV18's Jude Sanet took a closer look at the life of taxpayers in Tamil Nadu and found that the MSME sector has not had a smooth sailing where this tax is concerned. Take a look at this.
For Tamil Nadu's coffers, goods and services tax has been a godsend. In the 9 months of FY18, when GST was operational, the state has earned 87,000 crore rupees in GST collections. That's massive when the state's total tax collections for FY18 came in at 99,000 crore rupees. So the state exchequer may not be complaining about GST anymore. But 5 industries in the MSME sector are. So the state government is studying the stress caused by GST to units working in the automotive, textiles, leather, electrical and electronics and general engineering sectors.
Final report is awaited. So once that comes, we will take it up, especially for those sectors we are going to provide some assistance.
While helpful, subsidies alone may not be the solution. The pain point of GST is best understood in the electronics sector. Take a printed circuit board, for instance, which requires components from 100 different suppliers. Only 65% of these suppliers, manufacturers say, have acclimatized to the new tax regime. For the remaining 35%, GST refunds are still proving problematic.
Refunds haven't yet come. You know, that process is, I think even though government has speeded up that process, I think there is still a lot of pending refunds that are out there. So I think that affects their cash flow, and so that's a pain point for some of our suppliers.
Delayed payments and a spike in capital requirements have not helped either. MSMEs add that banks are hesitant to lend, and this has worsened the fund crunch. As per state government statistics, FY18 saw 50,000 fewer companies register as MSMEs under the Udyog Aadhar scheme than the previous year. It also saw 5 lakh fewer jobs being created. Things, however, seem to be improving since FY19 began, with 89,924 companies registering in the first couple of months.
If I look at our supplier base, we are very bullish. I mean, we are looking at localization going up from 25% to 50%. And in the last 2.5 years, we have established close to 140 suppliers in and around Chennai.
Several other manufacturers, especially in the automobile and electronic space, also plan to boost localization, and this, along with the Tamil Nadu government's plan to offer a subsidy for GST-hit MSMEs and soon to be unveiled electronics policy, could be a ray of light at the end of the tunnel. In Chennai, Jude Sanath.
All right, so interesting story there. We will get you more of that as we lead up to the first year anniversary of the goods and services tax. With that, we'll sip into a short break, come back, we'll get you an update of all the action in the world's biggest football tournament.
Welcome back. Well, on to a CNBC TV18 exclusive. Sources tell CNBC TV18 that the Tata Group is exploring options to divest up to 9% stake in Voltas. Kritika Saxena joins in with all of the details. Kritika.
Well, over the last 12 months, Tata Group has been doing 2 specific things. One is to reduce cross-holding and simplify the holding structure across group companies. And 2 is to increase cash flow from a group company level and from a group and an operating level. So what we understand is that there are many micro things that the group is looking at doing. And one of them is identifying individual group companies. So at this point in time, we understand that Tata Group may look at divesting some portion of its stake in Voltas, entirely in line with their plans to reduce cross-holding structure. So all in all, we understand from sources that from the 26.6% that Tata Sons has in its holding, Tata Group may sell about 4 to 5%. They also have about 0.58% stake of Evart Investment, which is one of the investment arms. They may exit that completely. Now, Tata Investment Corporation has about 3.01%. There's a very tiny portion of Tata Power stake, that is about 0.07%. But all of it together is going to come up to almost 8.5% odd stake, and then entire stake is likely to be sold off. Now, they're looking at various routes, so they haven't finalized the routes yet, but I understand that an OFS is one of the options that they may consider, and that could also happen in parts. It may not happen in one go. It's still in the works. We may see a couple of quarters for this to actually go through, but yes, this is in line with their plan to increase cash flow as well, not just reduce the cross-holding. And we understand from our sources that they may look at investing the amount that they get from Voltas into the defense and aerospace business, where, according to our sources, they are planning a significant investment. When we did contact Tata Group, they said that they did not want to comment on market speculation.
Absolutely. Thanks a lot for that, Kritika. With that, we'll move on to the next one. The third annual meeting of the Asian Infrastructure Investment Bank, or AIIB as we know it. It's underway currently in Mumbai. This year's theme is mobilizing finance for infrastructure, innovation and collaboration. Prime Minister Modi will inaugurate today's opening session. Ritu Singh reports on what else is lined up today. Ritu?
India needs $1.5 trillion of investment in the infrastructure sector over the course of the next 10 years to meet its requirement, and that is at the heart of the conversations here at the third annual Asian Infrastructure Investment Bank meetings that is being hosted in the city of Mumbai in India. Prime Minister Modi will be inaugurating the opening session on the third day of this 3-day long event. You know, all the sessions around here have centered around investments in infrastructure, the impediments and the challenges and the opportunities that a country like India presents among a whole host of other Asian delegates that will also be partnering. You know, NIIF, for instance, has already signed a pact with AIIB, and you know, that is expected to continue over the course of today. Several other discussions centering around infrastructure investments, and we'll keep bringing you updates throughout the day.
Okay, all right, Ritu. Thanks very much for that. Well, moving on, Maharashtra has banned the use of plastic carry bags of all sizes, disposable cups, spoons, containers and cellophane paper. Environmentalists are jubilant. Common folk are confused and scared, and the plastic industry and retailers are up in arms, and the state government is firm. According to the plastic manufacturing industry, the move will result in a loss of up to 15,000 crore rupees and nearly 3 lakh jobs. A defined government, meanwhile, has asserted that job losses, if any, will impact Gujarat and not Maharashtra. Ashwini Prilorkar and Archana Shukla get you more details on this.
Now, Maharashtra government has banned the use of single-use plastic across the state. But there's still a lot of confusion amongst people about the items that are allowed and the items which are banned by the government.
हमारी समस्या बहुत सारी है. हमारे पास जो 100 प्रोडक्ट है उसमें 50% प्लास्टिक का पैकेट है, जैसा कि फरसान है, कोई ड्राई फ्रूट है, कोई क्या भी है. वो छोटे से छोटी बड़ी पैकिंग हमारा 50% प्लास्टिक में है. अगर ये जो नहीं चलता है तो हमारा धंधा बंद हो जाएगा और हमारी दुकान बंद करना पड़ेगा.
कंटेनर बैन हुआ अच्छा है, लेकिन अपना दूसरा अल्टरनेट सोल्यूशन देना चाहिए था उसको. अभी हम लोग एल्यूमिनियम का कंटेनर यूज़ कर रहे हैं, उसका लीड है पेपर का. अभी बारिश के टाइम पे ऊपर प्लास्टिक से कवर भी नहीं कर सकते, उसकी वजह से पानी घुस जाते हैं, पूरा पार्सल खराब हो जा रहा है. और प्लास्टिक कंटेनर बंद किया, प्लास्टिक कैरी छोटा थैली भी बंद कर दिए है. उसकी वजह से सांभर चटनी सब बांधने के लिए सब दिक्कत हो रही है.
Plastic manufacturers claim that this ban has also put almost 3 lakh people out of jobs.
Impact in the industries, we have, almost 2,500 factories have closed down. Almost 300,000 people or 3 lakh people have lost their job directly. Indirect unemployment would be more than 1 million people. And almost 15,000 crores worth of investment has gone, is of no use right now.
But the government is saying since 80% of plastic is coming from Gujarat, and hence not Maharashtra but Gujarat government will face the problem of unemployment due to the plastic ban.
80% प्लास्टिक गुजरात से आता है. जो बेरोजगार होगी वो गुजरात में होगी. जो इन्वेस्टमेंट किया है वो गुजरात में किया है. कल मोदी साहब भी गुजरात में प्लास्टिक पर पाबंदी लाने वाले हैं. उसने घोषणा की है. तो फिर इन लोग क्या करने वाले हैं फिर? इसका जवाब मुझे कौन देगा? और इसके लिए एक राज्य ने जब प्लास्टिक बंदी का निर्णय लिया है तो दूसरे राज्य से यहाँ पे प्लास्टिक नहीं आना चाहिए. और दूसरे राज्य में इन्वेस्टमेंट किया है, दूसरे राज्य में बेरोजगार आपने रोजगार दिया है, तो यहाँ आके चिल्लाना ये बात भी ठीक नहीं है समय से.
Where does it end? You know, we are talking about environment-friendly Maharashtra, and which is why we are banning single-use plastic. What happens to the plastic from the manufacturer's side? Is there a discussion with the bigger manufacturers on recycling those plastics as well?
Yes, when we call single-use plastic, other plastic is the plastic which can be reused, can be recycled. So there is a concept called EPR, Extended Producer's Responsibility. In that case, suppose you produce something, then it is your responsibility to bring back that into recycler stage and into the market. Earlier, for example, Bisleri bottle. Earlier, Bisleri used to produce a bottle and he used to sell, and then it was not his responsibility where that bottle has gone, whether it has gone into some nala or in somewhere in sea or lying on a dumping ground. But now it is not the case. Now every manufacturer has a responsibility to take back plastic, they recycle it and reuse it. That's why EPR products, the products which are covered under EPR or companies which are doing this EPR are exempted from this ban.
What and what not? Questions surrounding plastic ban were the most discussed around the city of Mumbai and in other parts of Maharashtra, owing to the ambiguity still. While the administration says they had 9 months and the city and state are well prepared for transition, citizens were hoping for a smoother transition, especially when rain gods were playing spoil sport. The administration has now clarified that the prosecution of defaulters will only focus on the manufacturer's end and not on the end user's side. But for the citizens in Maharashtra, finding viable alternatives in the coming days will be the biggest struggle. In Mumbai, with Ashwini Priyolkar, this is Archana Shukla.
Absolutely. So interesting story there with regards to the plastic ban. We will watch out for it.
Welcome back. Well, some news coming in on Piramal, where they are planning the arm Piramal Imaging is planning Piramal Enterprises is planning to sell that arm to Alliance Medical. So I think that would be positive news coming in there for Piramal Imaging. But remember that Piramal Enterprises currently consists of the imaging business. It consists of the entire banking and financial business, as well as the over-the-counter medical business that they have. So they have the imaging part, which is generally considered to be a part of the entire pharmaceutical aspect of the business. So this is currently just news which is coming in.
So 127.5 crores in the previous fiscal. Net worth was negative of close to around 818 crores. So that should be a positive, given that they're selling a company with negative net worth.
Yes, and you know, it's a small part of the business that they were growing. I think Piramal is overall seen as an entirely financial business. Plus, they have a strong presence in the over-the-counter pharmaceutical business. So this would come in as a positive piece of news for them. But it also probably indicates the kind of focus that the company probably has or is shifting towards in terms of a strategy. So let's see what the valuations look like at this point in time.
It says base consideration of USD1 plus USD 1.1 million towards working capital adjustment on a completion of sales. So not too much, nearly $1.1 million, most of which goes via working capital.
So maybe they are exiting their non-core businesses, and that's probably what the strategy for Piramal Enterprises would be. I would probably expect the stock to see a little bit of a fillip on account of this. But nonetheless, we have Manisha joining in to tell us what she's looking at in the commodity and currency space. Manisha, morning.
Hi, morning, and thank you so much for that. Well, the crude oil prices, after falling 1% overnight, have seen some strength come back into that. That is because the markets are still looking at various supply concerns. Even if you look at the OPEC and the allies agreement, it really means that you wouldn't see more than 6 lakh barrels per day of an increase in supply from them. But if you look at the loss of output that we continue to see from producers like Venezuela, Libya, Nigeria, Iran, all of that really will continue to add premium. U.S. also has asked Japan to halt buying from Iran. So the Iran, concerns are really not out of the way. And add to that the fact, the kind of trade tensions that the major economies in the global markets are having, that also will have its impact. Also, Canada oil exports in July are expected to decline due to an outage in oil sands. So everywhere that you see, there is some supply concern, and that would be crude supportive. No such luck for the metal space, where you have seen zinc prices continue to trade around 10-month lows. That's because of increase in inventories. The speculators have been selling as well. Copper prices, though, have seen some strength. That one is off its 3-week lows. That is because you have seen the copper inventories decline 10% in last 6 weeks. Also, China has cut bank's reserve requirement, and that perhaps could lead to a potential demand going forward. But there is just so much uncertainty coming in from the global markets, equities, currency space, etc. So this is a bit of uncertainty that we are seeing in the global market.
Absolutely, uncertainty continues in the global market. We will watch out for that. Thanks a lot for that, Manisha. Let's move on to the F&O space. Then remember, this is day 2 of expiry. Yesterday was D-3 as far as the June series expiry is concerned. we saw 200 crores worth purchased by the FIIs in the cash market. So was that purely on account of some sort of rollovers or expiry unwinding? Let's see, because they also sold about 324 crores in stock futures. So this is something that we will watch out for. Apart from that, a huge amount of selling in index futures. The FIIs sold about 1500 crores in index futures. With this, their long exposure falls to 34%, the lowest this series, as well as the rollovers have been lower as compared to the previous months. 15% as against 19% is something that we see on a D-3 basis. The futures discount has fallen to 5 points as against 12 points premium that it was trading at yesterday. We saw a lot of action in the 10,800 call, which saw some writing. 10,900 call saw some writing. 800 put as well as 10,700 put saw some unwinding. So the cumulative premium on 10,800 stands at 100 rupees. That's telling you 10,700 to 10,900 is the range that the smart money is working with. Watch out for Walk Hard. That stock saw a sharp decline yesterday and now has entered the F&O ban.
Okay, all right, Mangalam. Well, on that note, we're going to wrap up this edition of Power Breakfast. Stay tuned. Bazaar Morning Call just after a short break.